Hello, folks. My name's Jim Harris, and I'm going to be helping you get through MBA 602, Managerial Finance. My purpose today is to introduce myself and try to talk to you about a number of topics that we're going to be going over in the course, and maybe a little bit of short explanation about each topic, and get you ready, hopefully, for the class. So anyway, let me start with some of the topics, like I said, that we're going to be going over in this class. First one we're going to talk about is probably the 5 organizational forms for tax purposes that organizations can adopt. You've got a sole proprietorship, a partnership, a subchapter S, a chapter C, and an LLP, limited liability practice, or LLC, limited liability corporation. And what we're going to do in class is talk about each of the advantages and disadvantages of each of these organizational forms. Next, we're going to be talking about statement of cash flows, the construction of one, and the interpretation of that. It is a macro examination of all of the financial decisions that a corporation makes during the year. The reason we do that is because the next step normally is financial ratio analysis. But if they don't pass muster on the macro part, the statement of cash flows, there's no sense going any further. And then if they do, then we're going to be talking about the ratio analysis. And I'm going to be talking about probably 12 different financial ratios, and then doing benchmarking against their peer groups, the companies that are about the same size, both sales and asset-wise, and in the same industry. And after you've done that, you have a pretty good idea of how your corporation's doing against other businesses that are about the same size and in your industry. Okay, the next step we're going to be doing called financial forecasting. This is where, given specific sales information, you're going to forecast a balance sheet and an income statement to find out how the additional sales that you're going to have next year is going to affect both the asset and liability composition of the balance sheet and the revenue and expense part of the income statement. And we're going to do an additional step when we're forecasting. Not only are we going to find out how much additional money we need to have, if any, and that's going to be coming from external sources, not just retained earnings, but we're also going to find out we're also going to be doing something called financial feedback effects when we're forecasting, because if you borrow money, unfortunately, the banks are going to probably want interest on that. So first thing we're going to do is, given the additional information on how much it's going to affect our asset categories, in other words, are we going to have to add assets, and if so, how many? Then we're also going to come back and say, okay, then I know how much principal I need to borrow now from the bank. But the second step is, now that I know the principal amount, I can figure out how much interest I'm going to have to pay on that additional money that I'm borrowing. So what you come up with then after 2 runs through the income statement is how much money you're going to have to borrow to cover both your principal and interest to cover the asset buildup that you're going to need for the additional sales. So then the next step is we're going to be talking about, and this is crucial, time value of money. There are basically 4 formulas we're going to cover, and they're called the present value of a dollar, present value of an annuity, future value of a dollar, and future value of an annuity. These formulas are going to allow you to know how much money an investment or a capital budget is going to cost in present dollars. And if you go the other way, how much money you're going to make, assuming, say, you're saving money or investing, how much it's going to be worth in the future. This is why you've been sent a financial calculator. The TABA2 Plus is a great calculator. I will show you how to use it. You can use it in your personal life, and I will get into if you ever buy a car, a house, things like that. But it breaks down from the corporate level to an individual level. It is also the calculator that is allowed if you ever decide to take a certified financial planner's exam. So it's very, very worthwhile knowing.